Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Although it was a directionless price action on Wednesday, it would appear that Thursday has come into a bit of a strong round of demand. As we can see, the Australian dollar is heading on towards the resistance now, seen around 67.25, and that could extend towards 67.70.80, and with the broad objective seen at 68.30.35. Meanwhile, the greenback continues to offer little comfort for the market bulls as the price action remains lackluster. Therefore, now waits for the US CPI data. It is viewed that the market may find a little bit of a mixed reaction from the release, but nevertheless, the US dollar is expected to take a tumble with the objective holding around 100 to about 100.50, and therefore should strengthen the market across the board. Looking to the euro, the direction has improved and at present looks towards the top side area around 110 that may extend on towards 111.30.45. I feel from the current trend that's holding that the market should encounter further strength and look towards that top side objective. Viewing Thursday's data, it is expected that the US consumer is likely to rise around 3.2%. That will be a slight climb from November's 3.1% inflation rate. However, ignoring the effects of food and fuel prices, what can fluctuate from month to month may see reports of the underlying inflation trends, which are expected to cool. Then on Friday, we've got the producer price index as a wholesale inflation. Although a potential rate cut is expected of around 25 basis points in March, Federal Reserve Bank of New York President John Williams said on Wednesday that it was too soon to call for a rate cut, as the central bank still has some distance to get inflation back to 2% target. As I mentioned, the dollar index is somewhat weaker and therefore should see gains in the euro towards that top side. With any pullback, the trend line holds around 108.35 to 45. Dollar yen is attempting to squeeze higher as the market looks on towards the region of 145.70.80. However, getting towards that top side where that stab was a few days ago, around 145.80, the market is a little bit weaker into today, and with a buckled RSI, still views a potential pullback. That is anywhere towards the region of 143, and with the downside call maybe extending down at 140. I'm not a bull at these levels, and I feel the market may actually show a negative response and therefore see a tumble as the yen is potentially expected to strengthen as the dollar weakens. All eyes were on the Bank of England Governor Andrew Bailey on Wednesday, as he expressed that it's important to curb inflation towards its 2% target and added that the UK hasn't witnessed any rise in employment as of yet. Nevertheless, the market was a little bit to the bullish side, and as we can see, a further improvement is coming through on Thursday, with the target towards the top side seen around 128.35, and my previous call still expecting to see further gains on to 129, maybe 130. Wrapping up with gold and oil, well, the market is a little bit mixed still, even though the support area around 2022 to 24 area is holding, and we may still see a topside challenge. I'm not ruling that out as of yet, and therefore could see any move towards 2039 or on to around 2050 to 60 area. Finishing up with oil, the roller coaster ride continues after the previous day's gains were erased. Nevertheless, the technicals are firm, and I feel that we could see a rise and still holding the potential target is $74 to $75 a barrel and reassess. Any weakness towards 70 or around 68.5 should respond to a bullish bias. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoyed a great start to the day.